All right. Good morning, traders, and welcome to this weekly strategy webinar. Today is Monday, December 5th, and I'm Michael Boutros, technical strategist. Great to be with you guys. It's been a few weeks. It's good to be back. Gusto, Henry, Pat, Mike's in the house, Ted, Theodore. It's great to be with you guys. So some housekeeping, guys. Obviously, the elephant in the room. I'm no longer with Daily FX. Actually, most of the guys on the North American team are no longer with them as they look to shut down North American operations. Look, you can find all of the latest charts, commentary, research for now on my Twitter handle at MBForex. God willing, within the next few weeks, guys, I'll be making a major announcement on where you can find all of my analysis, charts, and commentary housed, and hopefully I'll get that out to you in the next few weeks. All right, so in the meantime, there's some diamond trades coming along. So let's jump right in. On the menu for today, as always, we'll start off with the DXY. Take a look at what's going on with the euro, dollar CAD. We got the BOC on tap this Wednesday. Aussie dollar got Q3 GDP figures on tap tomorrow. And then we'll go into the commodities. I've been getting a lot of your messages, guys. I know I haven't updated enough, but we'll take a look at gold, oil, SPX, NDX, and obviously the Dow. Any other questions or trade setups you guys want to review, feel free to throw on the message board at any time. Febby, great to see you as well. A little bit smaller of a forum here, so we have a little bit more room. I hope to get all your questions out. Theodore, S&P, I got you. DJI, I got you. Crude, 10-year, put that on the list. And euro, gotcha. All right. Okay, let's jump right in. So here was our last update, or here's the last update I gave you guys. I don't know if I put it on Twitter for the DXY, but certainly this is something that we've been tracking, guys. You all seen this chart before. This is the weekly chart. Obviously, non-farm payrolls on Friday were quite interesting. We got a print of 263,000, beating that print of 200. Unemployment holding 3.7. While it's important to note that we did highlight that contraction in labor force participation, okay? So labor force participation, as we always know, when that contracts, will put artificial downward pressure on the unemployment rate. What does a lower unemployment rate mean for Fed policy? It essentially leaves room for the Fed to be able to continue to tighten. Remember, one of the things that they've already noted is that not only, obviously, inflation is kind of main central theme, but they want to see the employment market slow, essentially. Okay, so it was interesting because the initial move that you got was kind of what you'd expect to see with the dollar kind of ripping. Here's what it looks like on the daily chart, or here's what it looks like first on the daily chart, ripping right back into that 200-day moving average and then pulling lower to close lower on the session. It was a textbook fade. Ted says, I'm ready to subscribe to your new service. Cheers, Ted. I will keep you guys updated. It's my great desire to keep my research free for you guys, but I will keep you guys updated for sure. Are you still doing the next 2 weeks? Yeah, I'll be doing these webinars, guys. You know, I'm following markets and trading anyway, so I'll be more than happy to continue doing these webinars. If you have the link and you came to today's session, you're already on there. And I was a subscriber at SB Trade Desk. Yeah, Ted, I remember, brother. Always a pleasure, my man. And we'll keep you updated on the Twitter handle for sure. So stay tuned there. A lot of discussions in the works. In any event, for the dollar index, heading into the start of the month, right? Just a few days into December trade, I'm looking at something very interesting. Here's the daily chart. So, well, before I get back to this, the weekly. We've now broken below the 38.2 retracement of the entire 2021 advance. This is also the objective 1999 high and a major pivot in price. So last week, we did close below that level. It leaves the risk for further downside in the dollar. Now, this would be the third consecutive week. We've already seen a massive decline off that 114.77 level. I'd be hesitant to chase from here, but certainly in the near term, looking for 105 resistance if we're holding lower on the weekly charts. Can I see the start of that fork in full screen today? Yeah, absolutely. Which one? So the red slopes you see here are just trend lines. There's no pitchforks here. This trend line, guys, originates off the 2011 slope. All of the red lines you see here, major pivots in price I should probably turn this red. I'm not sure why that's blue, but all of these are the same slope. And you can see that former channel resistance, breach, support, breakdown, acceleration, resistance, 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 false break, pivot. We now just pivoted back below that. So it suggests that the threat for further downside. Now, in the weekly chart, the levels that matter. If you're a post-it note kind of guy, this is where you want to be looking. First level, 103.55. That's the objective 52-week moving average, okay? Just below that, the 2016 high close, HC. Again, don't take my word for it. Here's the high close. Here's the pivot and the highs for 2020. And here's acceleration on both sides every time we cross it. So 2 levels on the downside to be mindful of, basically into 103, looking for 105 resistance near term. Here's what the daily chart looks like. Now, as I always tell you guys, a break of downtrend support can oftentimes, sorry about that, I'm trying to expand the chart here. Give me 1 sec, guys, sorry about that. All right, so if we take it back to the daily chart, a break of downtrend support oftentimes can be the sharpest part of the drop. So you look at something like this, right, where we're basically just looking at basic slope resistance. Here's the original slope, a parallel extended off the low from October, nice pivot there, break saw acceleration, a parallel from the lows of September, caught the low last month. And what's this? Well, if we take a sliding parallel from the late low, okay, from that late low we made back in August, you could envision a scenario where you find some support here, false break type scenario, you wash out some weak hands for a recovery before the next leg lower. Also, I'm not a big fan of, there's not real hardcore divergence here, but certainly you're seeing price action making lower lows and the oscillator unable to do so. So the hallmarks of the downside acceleration, the downside thrust, the momentum starting to wane. So I've lightened the low. I'm just as a disclaimer, I'm not holding any shorts at this point, but I do think you want to look for some sort of pivot here. Now, 103.82 break, which is the 2017 high, I think would open things up. A 618 of the rally off last year's low gives you 102.32. But first things first, right now you're coming in some near-term support. 105.69 is the objective monthly open. Not Mike Boutros' opinion, fact, right? So that's going to be sort of our near-term resistance level. Obviously 105 would be ideal, but here's what it looks like on the intraday chart, okay? I don't like this pitchfork. Obviously, we've kind of broken out of it and we're sitting at it as support. I was kind of reassessing this last night. Do you want to kind of adjust the slope to get current market price action in? You could do something like this, okay, which opens things up a little bit clearer and keeps us within the sort of center bands here. Either way you look at it, I'm looking for that exhaustion, okay? Either the downside exhaustion for the recovery to fade or that break below 102.32, that's gonna be the move that's gonna unleash the next leg lower in the dollar. Now, as far as data is concerned, we do get, we don't have any major data on tap this week, I would say, from the US. You do get some PPI numbers into the close of the week, but you're going to be seeing some ancillary reads from the BOC. Again, GDP figures from Australia, GDP figures from Eurozone, GDP figures from Japan, kind of an update on where we are with global growth. But for now, on the DXY, it's not the sexiest setup, looking for that possible downside exhaustion here early in the week. Any questions? Apollo says, hey, I missed your question, Apollo. He says, it's been a while. Historically now, has December been in terms of volatility and volumes? In addition, what's your opinion on the declining DXY despite the interest rate disparity with other major currencies, indices, Bitcoin, and metals? So Apollo, great question. Lots in there. Historically, December does see some volatility. You always hear about the Santa Claus rally. I don't want to put seasonalities too front and center in this current global market environment, just because I think we're heading into a little bit different of an outlook, right? whether it's the recession call, whether it's the call for higher rates, whether it's inevitably people expecting the Fed to have to cut rates. I do think we're in a little bit of a different scenario here. That being said, DXY, like I said, if we look at the 10-year, let me take a question. Let me take a look at, you were asking about this earlier, Ted. Here's what the 10-year looks like on the daily. Guys, here's what the 10-year looks like on the weekly. I haven't touched this chart for 3 weeks. The 1618 extension was sort of the last level we said to look for something on the way down. We're below that now. That's 354. So obviously a false break of uptrend resistance. We ran into a 786 retracement from the decline off the 2007 highs. Here's the pullback. So again, you can envision a scenario where a little bit of a lift, but you look to make that sort of stretch towards major key support closer to 325, 320. Take a sideways look at dollar yen. You guys know how I think about this one. This one, perfect call into the end of November too. What a breakdown. This was not a popular call, guys. I got a lot of a lot of heat from people who didn't like dollar yen lower just on account of that stretch into 152. Again, the meaner the stretch, the meaner the reversion. This one, again, I haven't been actively trading. If you have any questions, let me know. I think there's a little bit more room to the downside. Sub 138, 138.50. I still think you risk a little bit deeper of a stretch here towards that 132.50 level. Theodore, can I have the daily again? On the 10-year? Yeah. Here's 10-year on the daily. So remember this pitchfork, which held for like 4 months, finally broke out. That was the unleashing of the ripper into the yearly high. Guys, this is the pitchfork we added. What was that? This was back in October. It's the same formation. Remember that triangle formation? Break lower. And again, that 1618 extension at 135, excuse me, at 350 was where our last sort of level target support was. We're just below that now, just below that now. All right, quick reminder to anyone in the room, there's a camera button on the top of your GoToWebinar screen. If you need to take a snapshot of any of the charts you see presented here, do feel free to do that at any point. All right, so that's DXY, Euro, quick look at the 10-year and dollar yen. Let's look next. So no change to any of the Euro level. Let me jump into the Euro, excuse me, that was DXY. Here's Euro dollar, first things first on the weekly chart. And here's our last update on Euro. I gave you guys back on the 23rd. So looking at this from the top down, right? Here's what the weekly chart looked like back last month. 2 levels that we had noted, major importance. We're looking for some major inflections. The first one was 104.88. That was the 2015 low close. Again, objective level, right? Not Mike Boutros' opinion, fact. So we just scratched the surface of that back on the 14th before pulling back. Ran into it again last week. Second level of importance upcoming here, guys, 106.10 into 106.37. That's the 2020 objective low and a basic 38.2 of the entire 2021 decline. Now, we haven't hit that level just yet, and obviously back last month, that level converged on a critical moving average. You guys know I'm not really huge on trading with moving averages. The ones I rely on most heavily are the 52-week, the 200-day, sometimes the 100-day. But the 52-week moving average here, sliding just below, we're testing that right now, 105.80. Just above that, again, 106.10 to 106.37 is going to be that key confluence region of resistance. So as it stands, kind of jives well with what we just looked at the dollar index, right? Maybe a little bit of recovery. Maybe Euro does make a stretch into it, but basically looking for topside exhaustion for a pullback. Ultimately, I do think you fade that weakness, but near term, you got to be mindful of this critical zone. So no change to anything on the weekly charts, right? Again, there's that 2015 low close, nice pivot in price, right? We're right there. That's now near-term support. On the daily chart, gave you the whole suite on that day. We were just testing the 2017 low day close. Again, we were looking for the topside breach for that stretch. Here's what the daily chart on the Euro looks like now. Really clean levels, okay? Nothing's changed. Okay, there's that 104.88 level, ripped right through that, right into the start of December. Here's that critical threshold, the 1618 off the low, a 38.2 off the high, 106.10, 106.30, looking for a reaction there over the next 24, 48 hours, right? Now, to add some juice to that, basic trendline support, right? Your basic slope analysis, support, extended here resistance, the break saw acceleration, tested as support, a parallel of that same slope off the highs from September, converged just above that 106.30 level. So any way you slice it, a little bit higher in euro, start to look for exhaustion, right? Not a trade recommendation, but just my humble opinion of what the technicals are suggesting here, guys. What's it look like on the near-term charts? Even better. Here's what the euro looks like on the scalp. And guys, here's what it looked like, back on the 23rd. If you ever have your doubts of these formations holding, same slope, nothing's changed. There was resistance. We ran into it, pulled back, slope support held, right? 109.17 was sort of what we, 101.97 is what we wanted to see sort of hold here. Rip higher. There's that key resistance zone. We're just pips away from it now. So look for reaction there. Near-term support at the median line, basically 105, okay? Ideally, 104 is gonna be that slope. It's the 25% parallel. We already see two inflections off that. Bullish invalidation, a level that would go ahead and shift our focus back to the downside, has to be 103, essentially 102.90, that weekly low from last week. Eurozone GDP growth rate for the third quarter, the estimates come out on, what is that, Thursday, I believe, or Wednesday, right ahead of BOC. So keep an eye on that read for euro price action moving forward this week. Euro full screen with the pitchfork. Yes, sir. Here's the euro daily chart. And here's that same pitchfork we've been following, guys. This is from the high of February 2018 and the high of May 2021. Again, testing the median line here, right? So another reason to start to expect some sort of inflection, some sort of near-term exhaustion. If we do pop and close above 106.32, it's the resumptive move, guys. You're looking for 108. You're looking for the upper parallel, okay? But all things held constant, our focus is on some sort of inflection, some sort of price reaction on that stretch towards 106.10, 106.30. All right, that is number 3, euro. Number 4, here's a quick look at dollar CAD. Dollar CAD was one of those trades into the close of November I was loving. I loved the reversal. I loved the failure at 136.50. The last couple of days have kind of been putting me on the sidelines. I haven't really been able to get a good fix on this, right? You got those release of CAD and employment figures as well. You got some gyrations there on Friday, but look, here's the bigger picture for dollar CAD on the weekly chart. Nothing's changed on this thing. The biggest move, or the biggest documented move that we were talking about last month, was the rebound off of 38.2 retracement, and we were looking for some sort of exhaustion into the median line. Again, last week gave it to us, or the week before last week gave it to us, but we've kind of been stuck here ever since. So the weekly chart, as I always tell you, when we're stuck in these formations where we're kind of mid-range, you're not near resistance, you're not near support, for me, goes on the watch list. I don't want to force a trade on this. Dollar CAD has been spectacular with the reversal since 139, but things are starting to get a little bit hairy here. You got the BOC on tap on Wednesday as well. So there's a lot kind of to keep in check here. Dollar CAD on the daily chart looks like this. Can I see the start of those forks, please? Sure. For the weekly, nothing's changed on this one, Ted. 2017 and 2020 highs. This is a parallel off the 2019 lows. Been a very nice sort of pivot in price. Okay, and here's the daily chart. This is just off of the lows from 2021. So you can see the current formation that we're in on the near-term slope. I showed you guys this last month. Nothing's changed. Like, what is this here? Is this a rejection of downtrend resistance? You should be looking for the next move towards 132, or is the recovery off this have larger to go? So for me, listen, it's the start of the monthly opening range. We've just come off resistance, both for the near-term downtrend and for the longer-term uptrend. So the focus for me is going to be sort of on a breakout of the monthly opening range for guidance here. Again, more to be desired on the daily chart. Here's the intraday chart, guys. This is the 4-hour. It's the same slope I showed you in November. Okay, there's 32.20. If you guys remember that, the recovery. Okay, and here was the pullback. So what are we doing to the start of the month? For me, the focus right now is 35.15 resistance, 33.20 support. I'm looking for a breakout of this zone for guidance. Now, ultimately, if we close 33.20, I'm looking for the resumptive move. You're looking for that pivot into 32.20, which was the lows that we caught last month. So look for a breakout here. Again, you have an interest rate decision on tap. Could see this thing give us a nice pop towards the center part of the week here, towards Wednesday. But for me at this point, the threat, ideal scenario, put a pistol to my head. I always tell you guys I don't trade with a pistol to my head, but if you did, I'll blow your brains out, Boutros. I'd be looking for some sort of exhaustion on a rally towards 35. The pullback ultimately to be faded, but I do think there's a threat here for a little bit bigger of a bounce. So it's on the watch list, dollar CAD. That's number 4, BOC on tap Wednesday. Number 5, thing that looks a little bit cleaner to me, and you guys know I love this pair, Aussie dollar. So look, the pivot above 66.60 was sort of the line in the sand. This was a huge zone of support we talked about for months and months and months. The pivot below saw an accelerated drop. The pivot above didn't see the accelerated rally, but it did get tested multiple times. Now, that extended rally has now come into an area of interest we've been talking about for some time. That's 68.70. That's a 38.2 of the entire 2021 drop. So a look back. Oh, by the way, Eurozone levels unchanged. Dollar CAD levels unchanged. So that's all my Twitter handle, guys. You can find all of those. Here is the weekly chart and what we've been following for the Australian dollar. So again, this was back on November 22nd. We were looking for that breakout, that pivot above 66, kept the focus on 68.70, a 38.2 retracement, again, of the drop from 2021. Downtrend resistance for this exquisite pitchfork. A little bit unconventional in that the low is not the actual yearly low from the calendar year, but if you take that August low, this year's high, and last year's high, look at that, guys. You can't make this stuff up. Break of the median line, accelerated rally. Here's the 75% parallel, again, converging on 68.70. So look, we're at resistance this week. 68.70 is the level you need to beat. If we close above that, you've got clear rain until the 52-week moving average, the 2020 yearly open, the November 2020 low, huge pivot zone, right? That's basically 70. But all things held constant, right now, the focus is on this region right here. The daily chart last month looked like this. Basic channel resistance off the yearly high was being tested. And again, we were looking for inflection right there. Here's what the daily chart looks like now. Same levels. The break wasn't quite as clean, okay? We soared through it, came back, but that pivot again near 66.60, that same godforsaken region, did hold for a third attempt. And then here's the rally and finally test into that 68.40 zone. The 38.2 has been added here, guys, but it's the same exact zone, right? So we're there now. The monthly opening range is setting up just below. These tend to be our best case scenarios, guys. Okay, so patience. It's December. The monthly opening range is right below a critical resistance zone. I'm loving it. I'm loving it. Australia GDP figures on tap tomorrow. Questions? I'm here, darling, in case you wondered. Hey, Javago, great to see you. I'm assuming this is Miss Javago. Always a pleasure. Total Bitcoin. Yeah, I'll take a look at Bitcoin. I don't really like the price action. I'll show you what I got, as I always do. I don't think the pain is done, but we'll take a look at that. We should have time today for sure. All right, so that's Aussie. Aussie on the near-term charts last month looked like this. And just in case you were wondering, same slope is in play. Love this pair. Here's what it looks like now. Okay, No change. Okay, so we've ripped through. We're at that 68.42 level. That's holding resistance right now. Support right back at former resistance, which is now 66.70. That needs to hold. Near-term bullish invalidation. The top side pop from here. You're looking for that potential rally towards 69.90. Basically, like I said, the 70 handle. But all things held constant. Again, guys, you know, we're at resistance. We're at resistance. Questions on Aussie? Okay. Hey, Jacqueline, great to see you in the room. Please kindly go over Euro briefly once more. So, guys, the recordings of these sessions, it'll take me a little bit longer, but I will have them up and I will have them tweeted on my Twitter handle. So you will be able to watch the recordings of this. But basically, just a real quick recap, Jacqueline, for the case, since you jumped in here. 106.30, 106.10, key support, 104 near-term, key resistance. That's a major level we're looking at. For inflection into that zone. Near-term support 104, bullish inval 103. All right. Okay, so that's Euro, Dollar CAD, Aussie, and those are the majors that I'm following. Do let me know if you have any other major, I see you there, Sterling. Look, here's what the British pound looks like. Again, I'm not a big fan of trading this at these levels, but here's number 6, a quick look at what Sterling's looking at. I don't think I've given you an update on Twitter there in quite some time, so we'll come back to that. But here's British pound, guys. First on the weekly charts, and I think this is kind of the most telling. The last level I went over with you guys was that stretch towards 121.50, which was the swing low that we made back here in May. So now I'm looking just a bit higher for resistance near 124.24. Is going to be the 52-week moving average. Just below that is this slope, which again is the same gradient, guys, as the major pitchfork we've been following from the 2019 highs, right? So it's been quite a stretch. You've had a 4-week consecutive advance. You're heading towards near-term downtrend resistance, or longer-term downtrend resistance, I should say. Here's the daily chart, okay? Clear-cut breakout of the yearly trend. We talked about that. Again, 102.06 was 100, 2 week legs off the low. Let me see if we have anything else upcoming here. 1618. So it's the 50 of the drop off 2021 high. Interesting. All right. So here's what I was showing you guys last month. I haven't changed this. I just did update it last night, but it's basically just a topside breach of uptrend resistance. You're still looking for that exhaustive trade. Looks like I was looking at that 50% retracement already. So look, it's not my favorite setup, Apollo, but I would be looking at similar scenario that we're looking at with Euro. You know, I think, you know, you're running into some resistance, maybe a little bit more upside to go, but I wouldn't be chasing the upside from here. I'd be more interested in fading a weaker print or pullback. On this one specifically, I don't even know if I'd want to get cute and try to short it. You know what I mean? So that's just one piece I put out there, Apollo. Really low conviction for me, man. Not my favorite setup here, but just my thoughts on the case. Jacqueline says, thank you, more than welcome, Jacqueline. Ted says, do you have a personal email, the old SB Trade Desk email? So Ted, for now, you can shoot info at SB Trade Desk, yeah. I'll be giving you guys an update on Twitter and everything with the new contact information. And like I said, some major announcements are in the works. I'm just not at liberty to speak at them just yet. So keep your eyes on the Twitter handle. 52 moving average converges on the 618 of the yearly range, Jay. So you can take the 618 of the yearly range. I know exactly what you're looking at, Jay, because I also considered what you're talking about. So if you take just the yearly range, so from the January high, Yeah, the 618 is just a bit higher, right? Near 124.70s. And that puts you basically really close to where the 52-week moving average is. Yeah, close enough. So basically he's looking at this. Something like this. Makes sense. Makes sense. You'd have to get another stretch from here, but possible. All right, so quick look there on sterling. Number 6. All right. Let me move into the rest of the block. Javago, I see your questions there. CAD yen. Hadn't looked at that in God knows how long. So like I said, I think I'll have time to do that. But let me just jump into a real popular, and I see Iman in the house here as well. Here is gold, guys. So look, the gold trade has been absolutely critical here. Where do I start? Let me get off with the weekly charts. Okay, so if you guys remember, we've been bullish gold for some time. You know, when we broke below 1670s, everyone started talking about the possibility of the double top. Like I said, I even have the measured move here. It's down into 1300. You know, higher rates, and you got the whole fundy guys. They were all pushing down, right, into a bearish call because of higher rates, and you know the market's doing all right and all this. But the technical structure, even into like the close of the month, of the quarter, was absolutely critical. Okay, and there was a couple of different indications that came out multiple times that would suggest stop your horses, forget the noise, forget the headlines. There's something here. There's something here that's a lot clearer. Iman says, you said before, I'm looking for a low in the third quarter, and we got it at 1614. Do you think that we put in a low and now we are back to the broader uptrend? If not, what is the level to give us confirmation for being back in the uptrend? And yes, I am here. Thank you, Michael. Iman, it's always a pleasure to see you. And again, our call for a low in the third quarter was based on what I'm explaining right now. The technical structure on this one was, I feel like it was clear in plain sight, but no one could see it because everyone was too excited about the fundamental description and all that. Look, not patting myself on the back here, just going to show you how the technicals guys a lot of times can give us that conviction to thwart and just ignore the headlines and the stories and the pontification, right? We had an outside reversal into the close of October, right off of support. That outside reversal candle not only was off of a major support pivot we've been watching for months, I would say years at this point, but it also cleared out the yearly downtrend. Not Mike Boutros' opinion, it was fact, right? We were just closed right there. The next week was really the tell. And this move right into the beginning of November, right, ripping through the accelerated move we want to see, was kind of our line in the sand. And we said there's two levels that we were looking at. First was 1791, 1788, the 38.2 retracement, the January low week close. 'Twas an outside reversal week as well. So this level was absolutely paramount. And then just above that was the 52-week moving average, which, you know, back last month was somewhere around 1803, now is 1804. Same exact levels, guys. Same exact levels, right? This is from November 23rd, same levels. We're now probing through this, but we're still below the 52-week moving average. What does that mean? Well, if we look at this from a momentum standpoint, there's not really divergence, but you're scratching 60. We noted back here on this breakout, that was the largest single week advance that we saw since back here in July of 2020, which again saw continuation for another 3 weeks higher. So we've now pushed higher, right? But we're still testing this major pivot in price. We're at resistance in gold. Do I think, Iman, back to your question, do I think that the low for the quarter is in? My humble opinion for the quarter, probably. I mean, we got a couple weeks left for the year, man. So I guess that's not a big call at this point. But heading into the third quarter, as you noted, that was our base case scenario, is that we make a low early in the third quarter and we look for that resumptive move. So look, I can't say, Eman, that we're in the resumption of the broader uptrend yet because of one single line. And that single line, I think you know, Eman, which one I'm looking at. It's the 2018-2019 trend line. Again, you get a lot of interviews in this season, guys, and a lot of people will ask for more in-depth explanations, but sometimes it's as simple as the technicals bearing fruit. Here's the 2018-2019 trend line, guys. This is what we call the original slope. Every slope you see here is derived from this gradient. We're now testing it as resistance. Now, again, we've seen some sail throughs, but every sail through has seen an accelerated pop or an accelerated sell-off. What is this? This is the time of which you want to be a little bit more cautious and look for clarity. All things held constant, I do like gold higher. Okay, I like gold higher above 1675 still, 1690 still, I would say. I like gold higher in general, but right now we're at resistance. Sorry, I'm a little anal compulsive here, trying to get my markers moved. There you go. Right now we're at resistance. Okay, so this is the weekly chart. Guys, take a snapshot if you need this for later, and let's drill right in. No change to any of the levels. Last month, we also noted on the daily chart, after failing right there at 1791, hey, we're still constructive above 1680, the level I just told you, 1690 now, right? Any pullbacks really should be governed max there. We're looking for slope support ideally, but we're looking for that rally higher and that test of the 200-day moving average. Here's what the daily chart for gold looks like now. Again, you can't make this stuff up. Didn't get much lower than that. That August 2021 low was the low, right? Rallied through. There's 1791, 1788, and again, 1807 was the August high, 200-day moving average, uptrend resistance. Ladies and gentlemen, we just did that right now, today. So yeah, I think gold's at resistance. And at the end of the day, near-term support 1768. That's the objective monthly open. Ideal scenario, losses should be governed by here, kind of like 1751. That's ideal scenario. Okay, but bullish inval at this point, I'm willing to kind of bring up towards 1730 for the near term. Really, if we get below that, you're risking a lot more. That's the August 2021 low day close. So the day that the low was registered, the close of that session, you've seen some decent pivots in price there. It's going to be our near-term bullish inval. What's your expectation for the fourth quarter? So, Eman, I haven't done quarterly forecasts on this, but at this point, geez, let me come back to you. I'd have to do some more research for a longer-term forecast like that. But into the close of the year, I do think you find support. Even if we pull back in December, I don't think this thing collapses. I think the low for the year is in. Okay, anything pivot on a weekly close above this region, and I do think you look for, basically 1890s. This is the bigger zone, but it's all predicated on what we do here over the next couple of weeks. Make sense? Okay, so here's the weekly, the daily chart for gold. No change to any of those levels from back last month. Again, I'll give you guys frequent updates on Twitter over the next couple of weeks until we get the new domain and everything kind of cleared out. And obviously I'll keep you updated. But yes to the maximum as always. Michael says, Eman, cheers. Always a pleasure to see you, Eman. All right, last but not least, just a real close look at what the near-term chart looks like for gold, because I've been following this one like a hawk. Guys, same pitchfork we've been looking at. Same one. Okay? We're now right here. Now, the August high, 1807, near-term support, Former resistance, 1788. Real tight so far, right? But the levels are unchanged. Levels are unchanged. So go ahead and feel free to take a snapshot of that chart as well, guys, on gold. Any other questions, feel free. And that is number 7. All right. Number 8, oil. Huh. Okay. If you hear me laughing, it's because oil trade has been something that has been just very contentious. Look, I don't want to get into the politics here, but you guys know where I've stood on this, right? You guys know my line in the sand. You guys know what we've been looking at. It's been the same exact level, the objective yearly open, okay, 17, 75, 35. You know, that was slope support from late 2020. That was the yearly lows. So your yearly objective, yearly opening range low, not Mike Boutros' opinion, fact. And everyone was getting so bearish, right, on the fact of, oh, the strategic oil, the strategic oil reserves that the Biden administration is doing should keep prices under wraps. Guys, objectively, again, forget the politics, okay? In my humble opinion, the supply problem has not been solved, right? Right now, you're seeing expectations for a recession, expectations for a slowing in global growth, expectations for slowing consumer. All of these things are bearish oil, absolutely, but they're all demand bearish, right? On the supply side of things, which is being buoyed right now again by the strategic reserve releases, which are going to end, and again, in my humble opinion, shouldn't be used for dynamic forces and prices. That's neither here or there. So I don't think that the broader supply constraint issue is done. That's just my humble opinion, guys. Okay. Now, looking at it from a price standpoint, we haven't broken support. So for these guys who are calling 59s and the guys who are calling 50, you know, maybe that's 59 would be a level I'd be looking at if we break, but we're still above support. So I don't see the call. Okay. Now, add some sugar on that, guys. Last week, we made an outside weekly reversal off support. That's not super bearish either. So I know, I just pleading my case, because it just seems everyone's so bullish. And then add to that, if you throw on it, or so bearish rather, add to that, if you throw on it, here's divergence. And divergence in the most classical version of divergence. Price action making a lower low in price, the oscillator making a higher low. So you've got all these technical factors, you've got, you know, the fundamentals obviously can be argued both ways, but from a technical standpoint, we've come off support. Now we haven't broken resistance yet, but we're still holding it. So drill down deeper. Here's what oil looks like on the daily chart, okay? This is a pitchfork, very unconventional pitchfork we've been following. Don't mind the larger one. This is the one I'm focused on right now. We're above the 25% parallel. The median line converges on that 2013 low at 85.61, or just ahead of it. Near-term support still right around 77. Okay, it's the 2020-12 low. That's the 2018 high. Major pivots in price, right? Former swing lows, acceleration, former swing highs, break and acceleration on both sides, right? That's now going to be near-term bullish inbound. So intraday, here's the 2-hour chart, or the 4-hour rather, okay? And here was our last updated levels on oil. So this was, again, guys, this was published back on the 23rd. All we did here was highlight support. You know, there was just a warning. Don't go chasing this. Everyone was already starting to call $70 and all this nonsense. We were still at support. 3 weeks later, guys, we're still holding support. Okay, and I don't know that this doesn't break, guys. This is my humble opinion. But the levels are there. 86 is the level we need to beat on the upside to validate sort of a reversal near term. If we break below 77, you know, at that point, you start to risk a much deeper drop. Questions on oil? Ted says, Mike, I have been in your room for over 4 years. Please continue your services, including webinars. Thank you, Ted. You know, you guys are the encouragement. It's so great to come start the week with you guys. It's beneficial for me as well in getting ready and just kind of boning up for the week, having my setups in play. So no, the engagement will be there, guys. I continue, look forward. Great things to come. I can just tell you, I'm very excited. There's a lot of very high level discussions going on, and I hope to have some great news for you moving forward, whether it's a subscription service or whether it's something even bigger, whether it's a new domain that I'll be moving with or not. Again, I'll have all that updated for you, hopefully in the days to come. But thank you, Ted. Cheers, mate. All right, that's oil. 15 minutes left. Let's jump into the equity block, shall we? Here is what the S&P 500 looks like. And again, one of those trades, guys, where you look back at what we've been looking at and the levels just continue to pay off. So here's what the S&P 500 looked like, again, on November 23rd. This was the weekly chart looked like this. We were just breaking through 40,000. That was the 618 retracement of the drop just from the highs that we made this year in August. But the big level of resistance that we talked about was 4165, 4105, 4105 being the objective February low, 4165 representing the 52-week moving average. So we've tapped 4105. We did that last week. This is now yearly downtrend resistance. Like I said, the yearly opening range low, 52-week moving average, all converge up here. So into the start of the week, again, you can envision a scenario where we push through, right? But you start to expect some possible failure or some major inflection. Now, what the major inflection would be, that would put us on a close above 4165 or whatever that is now. What is the moving average at? 4143? I don't know. But that's sort of my line in the sand. That's going to be absolutely critical. Guys, at this point, if we do break that level at 4143, what else is there? What else is there? Former basic trend support. 1, 2, 3. Break below. That's now resistance. So any way you slice it, 4105, 4143, both levels of which we're looking for some sort of inflection in price on the upside here for S&P, meaning possible exhaustion, meaning that, you know, we could see this terminate, start to move lower again. At the end of the day, this is absolutely critical, and nothing has changed from our outlook from last month. Nothing has changed. Same exact levels, guys. Okay. Now the daily chart looked like this. We were coming into the 200-day moving average. Again, just higher. You had that 100% extension, the 786 retracement. Here's what the S&P 500 looks like now. Haven't quite made it quite there just yet. But here's your monthly open just below, right? So no change to any of those levels. Near-term support at this point is now at that 618, which was former resistance. We tested it on Friday. That's 40,006. Bullish inval, 39,013. If we break back below those former swing highs for the opening range of November rather, you start to think for sort of the resumption of the broader downtrend. But guys, all things held constant, if we delete all the fibs and all the fib extensions, right, and all the moving averages, this is basic trendline resistance from the yearly high. Try to break it down to basics. Questions on the S&P 500? No divergence just yet on the daily chart. We'll keep an eye on that one. All right. Finally, last but not least, here's the near-term setup, and here's what it looked like. I don't think I gave you guys the scalp on this last update, but here's what it looks like now. Same slope we've been following since last month. That purple line you see there is a 38.2 extension. So taking the 38.2 of this range, pushing it out, you can see it caught resistance. That slope converges on the same level we've been talking about, 4105, 4147, 200-day moving average, 100% extension, February lows. It's all stacked up there with basic yearly downtrend resistance. Okay? Think I beat that horse good enough, guys? It's the pivot above 4147, 4150 that would be the resumptive trade. Okay? Other than that, I'm looking for topside exhaustion into that region. Okay, a quick look at NDX. I haven't really been following this one quite as closely, but I did just want to show you guys that the weekly charts on these things just continue to bear fruit. Next level on the upside here is 12,208. That's going to be the objective swing lows from last year. Key resistance is still 12,500, essentially this range right here. So same exact sort of scenario, maybe a little bit more upside, but looking for exhaustion. Okay. Into yearly downtrend resistance. I'm looking, that's the only thing that would put me back on a breakout mode on here. So just shifting the broader trend back to the upside would be a close above 12,668. Okay, that was last year's low week close. And that would necessitate coming completely out of the yearly downtrend. Till then, we're just rebounding within the confines of the broader downtrend. Make sense? Make sense? I have a great domain for you, traderview.com. Cheers. Ted, call me Michelangelo. I appreciate that, brother. Correction, closed out. Okay, so that's the Dow. So that's the NASDAQ. Last but not least, I see your question, Javago. I'm not going to leave without looking at CAD yen for you. So look, looking at the Dow. Here's a quick look at what the Dow is looking at. This is the only one that looks like more major breakout, right? Out of the three indices, this is the one weeks ago which broke the yearly downtrend. You haven't seen that materialize in S&P 500 yet. You haven't seen that materialize in the NASDAQ yet. The Dow has been absolutely ripper. So at this point, we pivoted below a major pivot in price. Where does this leave us? I don't really think the Dow is one of those trades where I've been as quite focused on trying to play because of this breakout. Here's the daily chart I've been showing you guys. This is the pitchfork. You know, maybe a little bit higher. You have the high day reversal close from April, right? That's like 34,800. We didn't quite make it there just yet. So look, a little bit more apparent on the divergence here, especially on the latest two highs. So yeah, I think this one's riskier. I just don't like where the Dow is trading at the moment. You know, the breakout is materialized. It is a breakout. I think that breakout is risking exhaustion. At the same time, S&P and NASDAQ, they haven't broken the yearly downtrend and they're risking exhaustion as well. Okay, so something to keep in mind. Something to keep in mind. Ted says, I'm not kidding. I have that domain. Ted, I may reach out to you. There's a lot of talks at play right now, but keep that in your pocket for now. Javago, I will take that in a moment. Any questions on the Dow? I kind of just ran through that, but it's not my favorite setup. I think it's the biggest risk out of all of them for the washout, but the downside might be more limited. So the divergence there is definitely something I've been looking at. Javago, Mr. Vago, let me take a look at CAD yen. What are you looking at there? It's not even on my list, but we could take a gander for sure. Let's see. Okay, so here's the weekly chart. I shorted at 1.9. Okay, so you're short from 109, you're saying. Yeah, bear with me one sec. Some of this is stale, Mr. Vago. So give me a second here. Let me just see what I can. Really nice turn from uptrend resistance. Again, you guys don't see this too often, right? Um, some brilliant divergence. Wow. Okay, that was a good trade. That was a good trade. Okay, so the high day close for the year comes in, or the high week close comes in right here. You're gonna want to keep that handy. Always down for some on-the-fly analysis, guys. Feel free. So that 100 we could probably drop as well. December high day close has been a decent pivot in price. That's now near-term resistance. Key support at this point is going to be down at that 38.2, the yearly range, or the range from the 2020 advance, which converges on the slope Jivago near 96.50s. So that's sort of your next major support on the downside. You're at risk while below 102.57. Now, what I'm doing now is I want to see if there's any merit to the slope of the decline. So the downside thrust, if there's any. Okay, more inclined to use the actual swing high here. Okay. All right, you can look at this in two ways. Both of these, in my humble opinion, both of these formations have merit, both using the low from August, obviously, or using the low from June. This has us at support right now, rebounding off the lower parallel. It would leave room for a rally back towards last week's high at 104. If we work with this gradient, you basically wouldn't want to see anything above like 103. 102.90s, and that would give us a little bit more convergence near near that 96.50 level, which is the same level we just highlighted. So whatever slope you work with, both of them are suggesting that in the near term, you do have the threat. Oh, I lost my slope. Sorry about that. You do have the threat for a little bit of a recovery, just off the fact that we pivoted back above that moving average. And that the top side should be limited. Again, 103 is kind of the ideal scenario on this scenario, or on this slope, the deader slope, it's going to be near 104, but basically suggesting you should be looking for exhaustion on the upside for this recovery. It still looks like a larger breakdown. So even if we look at this from an Elliott wave standpoint, assume this is wave 3, right? So you're in like wave 4 right now. Questions? Apollo says, Michael, I've only been in the webinars for the last 5 months and really like it. Will follow you wherever you are. As I'm a newbie, you really have shaped my trading horizons. But aside, how long have you been trading? Apollo, you humble me, my friend. Thank you so much. I've been trading since 2004, Apollo. Started my career there. I mean, you're trading in college before that, but real trading, probably 2004, 2005. So it's been quite some time. Quite some time, Apollo, and I've worked for all the major FX brokers in the U.S. at this point. I've worked on the trade desk. I've worked managing live futures accounts. I've worked managing prop accounts for brokerages, clear client trades. So I've been on all sides of the market, and certainly it's one of the funnest markets out there. We're not just exclusive to FX though, guys. I've traded futures, equities, obviously commodities, something that we look very highly into as well. I didn't get the email invite late for the showdown. Would you say we are now reversal for DXY? So Lung, I'm going to go ahead and post this recording up so you'll have the opportunity to go through the whole thing. Give me some time, guys, to edit on my side, but I will tweet the link later today. Thank you, darling. I'm open long at 100, spot 40. Hope to see 105. So 105, look ahead of 104, Javago. That's a level I'd be looking at with great intent. Let me just take one closer look for CAD yen before you go on the daily chart again. Right, these are the two scenarios that we just talked about. Yeah, very interesting. Yeah, look for 104 to be the breakout. Okay, that's the level I would want to see for you to continue favoring a large return like that. Other than that, one other level, 103, Javago, because you have the monthly open at 102.90 and the 200-day moving average at 103.18. So the big figures, right? 103 and 104 are both big levels on the upside here. Anything below 9950, by the way, you're likely to see an accelerated drop. I think there's another big drop if that breaks, but from here, those are two levels I'd be looking on the upside. Okay, I hear you clearly. Always a pleasure, Javago. Febby, Iran, George, Henry, Jacqueline, Andy. I'm not going to get through all of you. There's a full crowd here today, but thank you guys so much. I will be back next Monday. We'll pick things up again. I'll give you guys updates throughout the week on MB Forex. And again, I'll keep you updated of any new news that comes from my end. Best of luck trading this week. Remember, GDP data out of Australia, and tomorrow we got the BOC interest rate decision on Wednesday, and then some PPI figures out of the United States into the close of the week. So watch those major event risk releases. Manfred, thank you. Javago, thank you. Ted, we'll talk soon. Have a great week trading, guys. Cheers.